Be Wealthy and Smart, episode 760.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the stock market rebound. And as I am talking with you today, it's Tuesday, but you'll be hearing this tomorrow. The S&P 500 is near all-time highs, and that's so exciting because back in March, I talked about that during the stock market forecast episode, where I said the S&P 500 will reach new all-time highs. I was so confident about it. I also did a podcast for you called The Buying Opportunity of a Lifetime. And I did 2 strong buys for my VIP members and a bonus webinar for them, urging them to buy with all of the confidence that I had to get people to buy at those lows. And I'm so glad I did, because right now we have the S&P 500 up 4.74% year to date. And for the last year, the S&P is up 17.03%. So if you held through all of this during the last year, you would see the S&P had risen over 17%. The story's even better on the Nasdaq, up 22.05% year to date. And for the last 1 year period, the Nasdaq is up 39.27%. Our only real laggard is the Russell 2000, which is still down 14.25% year to date. But on a 1 year basis, it's down only 3.38%. So the Russell 2000 are the smaller cap stocks, and those stocks have really suffered because of the whole COVID crisis and economic shutdown. It was the companies that could do well during a shutdown, could still operate by employees working from home. Those tech companies really thrived, and companies like Zoom and Amazon, we saw take off because people could still use their services during the COVID lockdown. So mostly technology was the beneficiary during that time, but we're going to talk about why, although we think technology will continue to do well, why we are seeing a rotation to some of those smaller companies and why they are going to be the next ones to get the boost. And so there still is a great buying opportunity with those smaller companies. So I'll get to that in just a minute. But why have we seen stocks rise? We've seen stocks rise because there was a lot of government intervention that came out during this time that I called the chasm, or the time where there was no information about stocks and earnings. We called it fantasy land. There were a lot of different names that I called it, but basically there were no numbers to report. There were no sales to report. Everything had been shut down. And I said to you, they will call this the Great Depression. They will say that this is a horrible economy. And that's because the numbers would reflect that, because we went into a shutdown. But I also said because of that government stimulus, we are going to see a lot of money sloshing around, and it will find its way into the stock market, and that will drive this stock market to new all-time highs. And that's exactly what we've seen. We are seeing the stock market continue to rise because over the weekend we had another phase of stimulus that came in, and that was the rent/mortgage moratorium, which was extended to the end of the year. We saw unemployment payments continued, cut back a little bit from $600 a week to $400 a week, but continued through the end of the year. We saw student loans basically put into forbearance with no interest or payments until the end of the year. And we saw a payroll tax cut, which is 7.65% that's paid by employers for each employee, and then also the 7.65% tax that is paid per employee. So tax relief there to employers and to employees. And that has resulted in something really unusual, which is that we are seeing personal disposable income growth at a record high 44.9%. It's never been higher in a quarter when GDP growth has been more negative. And this is due to that government intervention and all the stimulus programs. So we'll see if it shows up in consumer confidence and spending, or if consumers continue saving and paying off debt, because right now there's very little velocity of money. The monetary stimulus that has happened has found its way into the stock market, but also those checks that went direct to consumers have not really flowed the way that was expected. And so we have people paying off debt and saving those checks, or putting it into the stock market, it seems. And so therefore, we have this high disposable income percentage that we've never seen before. And the chart I'm looking at goes back to the 1950s. So this is really incredible in terms of the increase of disposable personal income. And if and when people do decide to start spending again, that will help to stimulate the economy. But right now, we're still in that deflationary mode that I've talked about, and we have a little bit more of that to go. And I do think for a few more weeks, we'll see a deflationary trend, which will then switch to a more inflationary trend, especially in commodities. And we've already seen commodity prices go up at the store, but that's really the result of the dollar weakening, because we are seeing the dollar hitting lows that it hasn't seen for a very long time. So that weakening of the dollar means those imports that we have coming in are more expensive because our dollar doesn't buy as much when we're importing food. So when we see the dollar shift and strengthen, then we'll see prices go down and it will look like deflation. And then we'll see the dollar weaken again, which will seem like terrible inflation again. So I'm not going to go into a lot of that right now. We'll probably be talking about that later, but I do see the dollar strengthening before the dollar weakens again. So we're in for another round of deflation before we see some pretty serious inflation happening. And that brings us to the precious metals, because just as the dollar's been declining, our silver and gold prices have been going up. As you know, gold hit an all-time high recently, and even silver futures hit $30.19 a few days ago. And right now we're experiencing a pullback as expected. We are looking a little bit overbought here, but silver is up 41.55% year to date and 46.89% for the last year. And it was the best performing asset of all assets, all 44 different assets in July. As you know, we've also been a big fan of the mining stocks on this show, and the large gold miners we see are up 33.4% year to date, and for the 1 year period up 34.72%. And we see the small mining companies up 31.05% year to date and 35.07% for the last year. So our mining companies are doing great. Our silver's doing great. Our stocks are back at all-time highs. And the only laggard that we have right now is really the Russell 2000, which again, I'll get to in a minute. But propelling the market is the talk of another stimulus deal coming. And I do think we have another one in the works, as well as the president has talked about slashing capital gains via an executive order, according to Bloomberg. So we're seeing more taxes being reduced and more money put in people's pockets. This is the kind of thing that you want to see on a temporary basis to get the economy back on its feet. And once you have more people employed and paying taxes, that will be a good thing because we'll have more people paying into the system. But right now, we need to get those people employed, and it's all about jobs and getting the economy to recover. I also still think in our future, we're going to see some debt forgiveness. I do think we will see the elimination of student debt altogether. Right now, we have it delayed, but I think we will see complete debt forgiveness of student loans and mortgages, and we will see other debt be completely forgiven. That's part of what people are calling the global reset, and I am in full agreement that that is around the corner. So let's talk about this broadening rally in the Dow and what's going on there. We're seeing a rotation out of technology right now into the Dow stocks, the more traditional value stocks. That's because they've been the laggards. So professional managers are looking around saying, where's the value in the market right now? And if we're going to have a recovering economy, what is going to recover that we haven't yet invested in? Meaning, if we get a vaccine or if we have some kind of a treatment for COVID, this market will be off to the races again because those small businesses that had been lagging because they weren't leading the stay-at-home model will now rotate and take off because they will be the ones that are undervalued and are seen as bargains and will recover if the economy is recovering due to a treatment or a vaccine that is usable. This market has been really focused on healthcare, biotech, high-tech stocks that are able to do well during a closed economy and people working from home. And we have seen 40% of the S&P stocks are still below their highs. So there's lots of companies out there that have been laggards that are now going to look like attractive bargains for people who want to invest in a recovering economy. So while we're seeing this rotation and this pickup in the stocks that have been the laggards during all this time, that's a good sign, showing that we're seeing a healthy economy. This is what we've been waiting for. But don't forget, I still have my forecast of a W-shaped recovery. It's not a V, and so far we've got one half of that W. I am expecting the other half of the W. So while I am excited that we are near, or hopefully by the time you're hearing this, we've reached all-time highs in the S&P 500, and we are getting rotation into the smaller companies, which I've wanted to see that expansion and wanted to see that healthiness return to the market. We are getting close to a time where we will have a dramatic pullback. And guess what? Another good buying opportunity for you. So if you feel like you've missed out, if you've been fearful all this time, if you haven't been listening to my forecast or trusting that what I said was correct, well, you're going to have another shot at it. I do think that we have that other side of the W coming. So that will be something that we'll be talking about in the weeks ahead. But meanwhile, we're getting a movement in some of these laggards that are still undervalued. Buying those small cap Russell 2000 stocks right now, I think is a really good opportunity. Again, they're still down over 14% for the year. So you're getting bargains in some of those companies, and buying the ETF is an easy way to just buy the whole index. We like the Vanguard Small Cap Growth ETF, symbol VBK, as well as the Vanguard Small Cap ETF, symbol VO. And while the tech stocks look like they're due for a 10% correction or so, like I said, this rotation is very healthy, something I've been waiting for and hoping for, and now it looks like we're finally getting that with the Dow Jones more value-oriented stocks and the small caps starting to pick up speed here. So I look forward to seeing a new all-time high in the Dow. I look forward to the small caps getting back to positive, and hopefully we have some good news coming soon for some treatments or vaccine that will really boost this economy even higher. I think we could see that quite soon. So thank you for hanging in there with me, and hopefully I've been able to give you some confidence to be invested through this uncertain time in the market. It's the craziest time I've ever seen in my life in terms of investing. And I've seen a lot of different situations, but I have never been through anything like this. The only thing I knew was that we had a real buying opportunity at those March lows, and I felt very confident that for those people who were able to take advantage of that and buy, that there would be tremendous returns. So we're excited that not only did we see the S&P rebound strongly, but we've also done so well in our silver investments, including physical silver and also the spot price of silver through the blockchain, as well as our mining companies have done spectacularly well and have really given a boost to the portfolio in a very difficult investing environment. But this year isn't over yet. We've got much more to go and some very interesting things ahead, I think. So we will have some more challenges. We will have some more opportunities. But this is the year to A, pay attention to your money more than you ever have before, particularly your investments, and B, be more tactical with your investments. The buy and hold strategy has been very, very difficult during this time, and being a rotational investor or being an investor that takes advantage of opportunities and understands some of the tactical moves to be made has really helped us because we've been able to take advantage of these sharp rises in precious metals, which are just beginning, in my opinion. Yes, we will have pullbacks in the metals that will be sharp. That is a volatile market. But we also have much, much higher to go on the upside over the next few years, in my opinion. So being tactical with your moves, understanding when things are overvalued and being able to lighten up and being able to buy back in at the lows really has served us well and really can pay off quite dramatically in this type of a volatile market. So while we're not day traders by any means, and we're not even really short-term traders, we are opportunistic traders. We are opportunistic in finding where the growth is so that we can invest early and for the long term and really spectacularly compound our money. Because that's really what this is all about, is getting your money to work harder for you so you don't have to work so hard. It's really about being a good compounder of money because that's how the wealthy get wealthy. Warren Buffett didn't get wealthy by not spending money or being a miser or reducing his living expenses. He got wealthy by investing and compounding his money at a very high rate. Right around 26%, I believe, has been his compounding rate. So anyone promising you more than 26% returns, well, just chalk it up to a bunch of hot air because 26% on a consistent basis will make you one of the wealthiest people in the world, like Warren Buffett did. It's very difficult to get consistent returns higher than that. Yes, you can have a year here or there, but even the professional hedge fund managers who have all of the latest equipment, information, resources, and then some at their fingertips are not able to beat Warren Buffett's track record. So all I'm saying is don't fall for these high percentage returns that some people are touting out there as if they're able to double their money, triple their money year after year after year. If that were true, they would be the richest person in the world. So yes, you can have an anomaly here or there. You can have a good year here or there, but we want to be consistent and we want to have good compounding over time that at least matches what the stock market can do, that 10% average annual rate of return that we always shoot for, plus more than that, if possible. If we can find those opportunities, if we can take advantage of buying at some extreme low prices, if we can find where the anomalies are that are going to take off in the market and be able to invest in those areas without taking undue risk. We're not talking about individual stocks. We're not talking about high flyers. We're talking about diversified portfolios that limit risk and also can give you compounding opportunity on the upside. And that's really the true secret, is reducing the risk while you're maximizing the return, the alpha, the amount over the average of what the stock market does. That's called alpha. and increasing your alpha, doing better than the S&P 500, doing better than the Dow Jones Industrial Average, doing better than the Nasdaq average, that's where the big money is. So people that can do that consistently and are good compounders of money, that's the success that you want. It's not the one-off high flyer or the lucky person that has a good year. It's the consistent, good compounding performance that's going to build you true wealth, get you to the retirement that you want, and true financial freedom. If you haven't yet subscribed to Be Wealthy and Smart, hit that subscribe button and you'll be notified as soon as new podcasts are available so you never miss one. And of course, we still have our review contest going where I'm giving away 25 prizes. You can win a Wealth Heiress book signed by me. 10 people will win that. 10 people will win my Wealthy Mindset Blueprint audio sets valued at $197. That will give you a wealthy mindset, step 1 to wealth. And 5 people will win one-on-one wealth mentoring sessions with me. All you need to do is leave a podcast review for Be Wealthy and Smart on iTunes. If you have an iPhone, that will get your name in the drawing one time. If you have an Android, please leave that review for Be Wealthy and Smart over on Stitcher.com, Stitcher.com. And that will get your name in the drawing one time. And if you've read the Wealth Heiress book or listened to the audiobook and leave a review for the book on Amazon, that will get your name in the drawing 2 times. And winners will be announced on the August 31st podcast. That's a Monday. So please write a note on your calendar to listen in that day and see if you've won. I hope you do. And your chances are really good, because there's 25 prizes and I don't think I even have 25 reviews yet. So everybody right now is a winner. So get those reviews going and I'll see you on the 31st. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.